Hey, welcome to the closing beat, everybody. Happy Tuesday. How you doing out there? This special gift from one of our clients that stopped by, Martin. He thought it'd be a good idea to bring us some sake. And I don't know if I've ever shared my sake story with you guys, but it smells good. I'll tell you that. But it's going to take a lot to get me to drink that, even some of it, because I think many people have issues with sake, don't you? Many Americans do. I think it's part of our problem. Anyways, hopefully I look good today. Look a little bit younger and everything. My wife says that this show, the lighting makes me look older than I am in real life. So if you ever meet me, hopefully you find that that's the case. I don't know. I've got a face for radio either way, I think. But anyways, we're financial advisors here at Jazz Wealth, obviously with a sense of humor. And we're just trying to be that advisor that's just normal. We're not trying to sell you anything or find out that there's some catch or that one of us is like some criminal or something. None of that, right? We're just trying to make it real easy for you to get all your finances in order, all your investments, retirement, long-term savings goals and things. As we like to say, keeping your dough straight to just try to even further normalize the whole process there. So I hope everybody's doing well out there. Welcome all of you. Mark, Doc, infamous KB. All right, I like that. Andres, how we doing today? Welcome to the show. Our Wine and Wealth class 2 weeks ago was an open house. If you want to see how we do things there, we actually did it publicly on YouTube as well. Last week we talked about our funds and how they work, and a little detail wrapped around that. We also have FinTips videos. We call them FinTips, but they're live or public on YouTube there every single day. Yesterday, Eric did some money mistakes in your 30s. Hope that helps there. And I did a fun one today about your 401k kicking you out, because that's a real thing that if you don't have enough money with them, you leave your job, they in fact can kick you out and you are the one that has to deal with the tax consequences. So I gave you a few workarounds there so you don't have to deal with that, because even a few dollars in tax, doesn't it just grind your gears? Like, really frustrating. I mean, I'm on this mission lately to keep all of your dollars. Look at it, was it 21 million tax returns haven't been filed yet for last year to get your refunds and all that. That's crazy. Come on. Anyways, enough of that. Let's get started here. On the right-hand side of your page, you see some weakness there now, do you? I'm going to use the SPY today. We'll do a little bit different. And go to the 5-minute chart so you can see something really unique. Here's the start of the day. You don't like to see this in bear markets. Bull markets, it's okay because maybe it's a temporary top and it's a buying opportunity and get excited, but you don't like to see gaps higher, right? I'm not talking about just shooting higher in the morning. I'm talking about overnight excitement that obviously turned out to be a little bit more, that then fails. And fails would mean it erases all of itself and then some. So you could see the gap real clearly here this morning. Little morning excitement in the first 5 minutes. Each one of these bars is 5 minutes. And then we spent the rest of the day consistently and orderly selling off throughout the day. That's not a good sign. Nobody likes to see that, because it tells you that no matter what you think, the pressure is to the downside and nobody's going to get in the way of that pressure. Notice that even throughout the day, any little tiny attempt at a bounce by the day traders, the people that decided to pick on maybe a dip to buy, they were wrong. Every single time you're wrong. That's frustrating. That makes bulls throw their hands in the air and say, I will come back another day. And that's what you have there. Never, ever like to see that. Nonetheless, you got the S&P just barely keeping above the 20% mark year to date. Remember, this is an oversold bounce that we had just gone through. Oversold bounce, or a mean reversion. If you want to sound really fancy in front of people, say, boy, that mean reversion is sure getting erased pretty quickly, is it not? How can we tell that? How do you know, by the way, when it's a mean reversion bounce or if it's a substantial bounce? People interested in buying this is something that's long lasting, or at least has some legs to it, versus a dead cat bounce, which is often what we refer to it as well. Well, here's how you can take a look at this. What we did is we said, okay, all the stocks that had sold off from the beginning of the sell-off, right? So let me go over here. All the stocks. We looked at 1,500 stocks here, right? From here, all the stocks that had sold off here. Which ones have seen the biggest bounce, right, over this course of period? So the weakest ones, every stock really, through all of this downturn. Then we said, now compare the performance of that to just these 5 days right there, okay? That's what we're looking at here. Here's what we've got. So we broke it into 10 categories, so 150 stocks in each separate category because it's almost impossible visually to plot them all. So we do it this way. It's called decile performance. It's just a fancy way of looking at it, but just we bucketized all the stocks. So if we look at the worst performing stocks from here to here, all the way down, which ones were the worst? Well, we found them, and we found that they were the best performers from that recent low during our mean reversion bounce, right? In other words, the stocks that were the most oversold throughout the year got the biggest bounce over the last couple days. The second worst performing stocks over the course of the year were the second best performers over the course of the last couple days. And you can see, it just goes like that. The best performing stocks, the stocks that held up the most this year, and maybe you were still down, but they didn't sell off as much as the market and all that, they were the worst, or the best performing, the best performing stocks on the way down. They were the worst over the last 5 days, right? Meaning the money wasn't going to relative strength. The money has been going to, and this happened last bounce as well, went to the oversold stocks, the value stocks, your discounted stocks overall. The very, very same thing happened right here, and I shared that with you as well, which means this is just a mean reversion, oversold bounce. It is not indicative of something where there's broad buying. People just want in. They say, forget picking stocks. I want in the index. That's the only way to invest. Remember, they're all quiet right now because it's a stock picker's dream out there. So that's how you know we have more of a significant bounce. We just don't have that right now. So that was a long-winded way of sharing that with you, so I'll move on. You've got the Russell 2000, right? One day it's exciting, the next day it's weak. It's down 22% year to date. 16% of that has come in just the second quarter, which is almost over, by the way. Small cap growth has been hit the hardest, as it should be if we're supposedly going into a recession, or most of us believe we kind of already are. So that's the Russell 2000. If you look at the NASDAQ, it's down 27% year to date, but 20% of that is in the last 3 months or just through this last quarter here. You could see a lot of that weakness, the speed of the declines there, right? The amount of ground it covers in one day on the way down has just been super impressive there. And that's all big cap tech stocks as well. Looking around here, we've got gold. I keep hearing the commercials on TV. It really bothers me. But you hear these commercials on TV where it's like, inflation's going crazy, gas prices are out of control, war, this and that, the economy in the pooper, right? They go through this whole thing and they go, but smart investors know to buy gold through I don't even remember who it is. All these gold companies. How is that smart? Nothing has happened, right? In fact, if you were ahead of inflation, right, you lost money. You're down. You lost. There's no way around that there. Silver's a little bit different. There we go. Silver, right? Meaning it's worse, right? So people that said, well, I don't know about gold. There's no industrial value, blah, blah, blah. I'm just going to go with silver. That's even worse. So this whole idea of using gold or silver as a hedge against hyperinflation, or rapid inflation, we should say, just it's not working. What would be working is if you were betting on oil or gas prices to go higher. Oil's higher again. In fact, if you look around the S&P today, again, only your energy stocks are going to be stronger on the day. I will continue to maintain that I think this bounce is a mean reversion type bounce, right? It's an oversold bounce. I don't think it has legs to move back to highs. I would bet on that one there if I had some way to want to do that. I just don't think it's going to be long-lasting. ConocoPhillips, ExxonMobil, Chevron, all of these are exciting, but where's the excitement? Look down here. So here's the volume. On a bounce that has legs, you want to see volume going up, not down. You know, a great example, I don't even have to look at the chart. Over here somewhere, I can see it in the corner of my eye, right? Right about there. There you go. So we have a rally where volume's going up. Excitement is there. There's lots of money going into it. We don't have that this time. It is simply an oversold bounce. That's my opinion in this case. I don't often give my opinion, really, but that's just really what it feels like. If we look at Bitcoin, it looks like it's going to make a new low there. It's flirting with the 20,000 number. I don't need to tell you guys, you know what this is all about there, and you probably watch it more than I do. I don't really watch the crypto space much at all. Let's do something fun here. You want to do something fun? There's a handful of stocks out there that have had a horrible streak of bad luck. And by bad luck, we mean stocks that have consistently month over month, markets be damned, have continued to move lower there. What we did is we looked at 1,500 stocks, right? Instead of just saying the NASDAQ or the S&P and sort of cherry picking, we said, all right, let's look at 1,500 stocks and let's just make sure they have at least $2 billion in market cap there. And let's see which ones have had the worst string of bad luck. It's not pretty. This is since the beginning of, well, this is going back 7 months here. So here we go. Most of these are from the consumer discretionary space, which by the way, you can use the XLY if you're interested in that. That is consumer discretionary, most popular ETF to look at. It is also the worst sector year to date, losses of about 30%. The average loss, let's go back. There you go. These are all stocks that have had consecutive losses of 7 months or more. Some of them are going on 8 months. The average loss between all of them is about 40%. And if you own one of these, boy, I'm sorry, that's a tough one to own. But if you lose 40%, you need about a 70% rally, right? Remember I shared this with you guys, if you sit through a pullback, how much of a rally do you need? So kind of a fun thing that people often get wrong. But down 40%, you need a 70% rally just to post a gain. So think about where we're at. We're at the halfway point of the year, really. And so we would need a 70% rally on average from these stocks in order to post a gain for the entire year. That's a tough one there, right? Etsy, down the most. It is currently down 70.7%. It was the closest to breaking its streak, right, of being down 7 or more months in a row. Let's go over here to Etsy. So only because it's sitting at its lows here. It only had about 1% before today, less than 1%. Before it would break its streak of 7+ months in a row of losses there. But it fell like 8% here today, so that's going to make it a little bit harder because there's only 2 days left to go, I think, in the month. Crocs would need to gain over 8% in the next 2 days to break the streak. It's down 67% in over 7 months in a row, consistently being down. And in fact, Crocs is down 7 months. Best Buy is the one that's down 8 months. So over here, down 40% overall. It's 8-month streak. It would need to gain over 15% to break its 8-month streak. In other words, it's likely going on a 9-month streak of being down in a row. 9 months in a row. Isn't that impressive? So these are pretty nasty. Under Armour, here it is, down 60% there. It's not much better. It needs 15% rally as well in order to break its streak there. Just a handful of names maybe you want to take a look at. Nike also is getting worse just because of earnings. We'll cover in a little bit, but I thought that'd be a fun thing to look at. I was just trying to think of an interesting scan of something that maybe you guys weren't aware of that would show some kind of value since you guys are here watching, hanging out with us. I do appreciate it. All right, stocks in the news. Can I try something since nobody's here today and it's just me? Oh, it's working. Stocks in the news. Nike. It's like a news thing here. So Nike, as you can see next to you there, beats on earnings for the 8th time in a row, or for the 8th quarter in a row. See, I could never be a news anchor there. The issue was their China business. Business in China, which is where they do a lot of their manufacturing, and Taiwan as well, down 20%. The U.S. fell 5%, but we saw, looking across all other regions there, we saw double-digit gains, more than that actually, across all the other regions that they report on. That's pretty cool, huh? That's all Nike stuff, by the way. I don't know. It's impressive. We barely know what we're doing with this tech stuff. They guided for gross margins to be lower by about 0.5% year over year. Here's the trouble, and I'm going to go away from this before I mess this up. There we go. They said, look, our margin is going to be down about 0.5%. Okay, can we raise prices? And they actually called it pricing actions. Fancy way of saying they're going to raise prices. They say, yeah, we're going to raise prices to offset that margin decline. All right, that's pretty interesting. All right, I can get excited about that. You have the pricing power to be able to do that. But then they said the trouble is the freight liners that we throw all the boxes of shoes on, ship them over here. Costs are going to be so much, it's going to offset our pricing actions by more than 1%. And that's why the stock's down today. So like, okay, we can raise prices, but it doesn't matter, right? It's still going to hurt us there. So the stock made new lows. In fact, it was the only S&P stock to make new lows today. They are buying back shares, a lot of them, 19 million, something crazy like that. It's about 10% of their market cap overall. And they said, look, we're still focused on going direct to the consumer. To hell with this loading up shipping containers full of shoes and shipping them all over. We're just going to right to the consumers what we'd like to do, and net revenue is up 7%. So if you're looking for a bright spot there, it's kind of, right? Need more information. Robinhood. Yeah, that's what would happen if you had invested in Robinhood. Down 3% on the day. That company, FTX, says, we don't know what you're talking about, Bloomberg. We are not in talks to buy Robinhood, per the article that we talked about yesterday. And Robinhood says, no comment. We're just not going to comment because our stock's getting hit here. So if we say yes, then the stock gets hit more. Pretty smart play by their PR team there. Occidental Petroleum, Warren Buffett's team is buying more shares in that one. It was a lot, 800,000 more shares. Warren Buffett is in this mode right now where he likes companies that are buying back shares. Apple, great example. So if a company is buying back their shares and they fit his other criteria, he's like, yeah, all right, let's go. Let's go all in. We got nothing else to do with this money. So that's what's happening there. JetBlue, I'm officially confused. They increased their takeover offer, a handful of things. They even said, we'll pay 10 cents a month in dividends as a ticketing fee to anybody that owns the stock while we're going through this deal and until the deal closes. So they're willing to pay out 10 cents a month in dividends. That was part of their deal that they sweetened. But on Frontier's website, they just basically said, hey, we're already partnered with Spirit. This deal's going through. Look, here's how it's all going to affect you and everything. They spent a lot of time putting that. I don't know. I'm not sure what's going on there. Jazz. I follow these guys because, truthfully, it's the only company I hope doesn't really make it because I'd really love to have their ticker symbol. They stole it years ago, and I was like, I'm going to have a public company. I'm going to call it Jazz. It's a pharmaceutical company, really the only one that I follow there. They had a drug that missed, I forget what phase it was, but it missed one of their endpoints that they were focused on there, and didn't affect the stock too much today, which is kind of a bummer. And lastly, before I take your questions, California. You guys are lucky over there. California is going to fight inflation by giving everybody money, a couple $100 a person. If you're married filing jointly, make less than $150,000, you'll get $350, and the spouse will get $350. You get another $350 if you are if you have a dependent, son, child, whatever. They say you're going to use this money to go help pay your bills, rent and utility bills. They didn't say anything about mortgage. They said go pay your rent and utilities. The scary part is if you make over $250 to $500,000, you get $250. If you make $500,000, you get like $200, I think, like that, something like that. So a lot of people are going to get some money over there. This won't come to you until next year, by the way, but it's going to fight that inflation right now. I have a problem with that. I think politicians should have to take economics courses because I don't know if you know, I remember vividly learning it because I made a flashcard out of it in school. Inflation is when too many dollars are chasing after too few of goods. So if we add more dollars to the equation, how does that work out? So I don't often go on the fence like that and say, boy, that's a horrible idea, but right? It's kind of like not a great idea, huh? That is crazy, man. Anyways, I'll take your questions here if I can happen to answer them for you and like to do that. Oh, Cody's not here today, so they can have at it with him. It sounds like a good deal they're offering, guys. I don't know. Maybe you want to check it out. Some of you may be into that stuff. I don't think there's anything I can do about it, can I? Oh, look at me. I can do it. Ta-da. Anyways. Short squeeze inbound shorts are about to get schooled by the market. You think so? Okay. Cool. We haven't seen a lot of that lately where after having a strong move up, and you know how we've been quickly reversing that, we have not seen the immediate 180 from that. So that would be impressive if that did happen. That'd be the first time this year almost, right? Besides, I'm looking just briefly here, besides March 24th, there's an opportunity where we had a somewhat sharp move lower that was immediately reversed for the short term there. But yeah, there you go. Sorry if I missed any questions here. Tesla pulling back here as well. Tesla down 5% even on the day. Yeah. You have any way to calculate the positive effect of buybacks on a stock price? I did about, it was pre-COVID. We did a whole study on that. I'd have to dig for it. I save them all. So I did. If I find it, I'll make it one of the topics that we talk about here, because that's a good idea. Yeah. Raytheon, time to grab it up. Raytheon would be one of the stocks that's fallen the least from when you can see it, right? It's fallen the least. It's had the least amount of interest on up days, although not horrible. So I would say, ooh, that's in that camp that's not getting any love right now, whereas all the deeply discounted stocks are. I like relative strength, but it's just not getting the same level of excitement. Yeah, I did. So the California thing, it kind of sounded like a little amount of money. I wouldn't be complaining if I was in a tough spot. I lived in California and I needed the money, or, and inflation was really eating me up. I'm not saying I guess I would argue with it, but it just seemed like it was kind of a slap in the face with the amount. Or can't you just lower the taxes? I think they were getting rid of their gas tax for a little bit too. I missed that one. But yeah, I just, the whole economics of this, it's like the opposite. You taught this in school and then you go out in the real world and you implement different strategies. PR guy there, Dustin, are thematic ETFs and others worth any attention? They're not getting a lot of attention. I'll give you that. I get an email every night of anything going on in ETF land, and thematic ETFs were more popular, kind of in the SPAC days. That's when they were more popular. They're not getting a lot of money, and that's the trouble. So when you look at some of these and you go, all right, I think that's cool. It's a very unique niche type ETF. If you're the only one really participating outside of whatever institutional investors they could round up, makes you kind of feel, I just wouldn't want to participate in that. I like the volume. It's got to be good volume. I want to know other people are playing. If I get it wrong, that's fine. If they get it wrong, that's fine. As long as we're all in there playing the game, that's what I care about. Yep. Trading with a dummy. You ain't no dummy, but it's good to see you, sir. Welcome, welcome. Playing the dummy game. How do we find out things CEFs are investing in? I have a difficult time. Is there any public place? What are you using? Like what? Thinkorswim or what? Interactive Brokers. Interactive Brokers, you'd definitely be able to look at the details there because they get market data feed from anything, everywhere. You might have to pay for it, but you could just cancel it when you're done. Yeah. You got SBLK. You want to? So you got it. You want to add to the old portfolio there. Because, I see what you're saying. So you're saying, all right, look, it's pulled back. Yeah, I'm looking to add some into this. That's where everybody else is giving it a shot. One negative, why didn't it bounce with everything else? Like, you got at least some kind of a mean reversion bounce in the markets and broad stocks all over the place. We got nothing here. So if I were looking to add to this, I'd be picky about the price and go, I'll tell you what, I think I'm going to get it cheaper. I'm willing to add, but I think I'm going to get it cheaper because it's not willing to bounce. Nobody came to buy this when they were buying everything else. That's weird. Is there a website where you can track money in and out of the stock market? You'd have to be more specific than that. You can track buys and sells. You can track dollars of buyers versus dollars versus sellers. But it would be a very large number. They often say it on like Bloomberg or something at the end of the day. They'll say 800 billion on the buy side or sell side or whatever. But if you're looking for something more specific, you just have to define it first, and that could probably help you there. ESG ETFs is turning out to be something that the industry put a lot of money into, and it's not quite catching on yet. It may, but right now it's just not catching. I have people call me nonstop every day going, what are you doing with ESG? What are you doing? Can we offer you this or offer you that? And I'm like, not one person's asked me about it. So I'm gauging that we have 7,000 clients. We have yet to get an email from anything about any of that. So that's a nice sample size. Are you still sitting on cash? Are you fully invested now at Jazz? No, we still have cash. Mid-cap fund, large cap fund, aggressive stock fund, and small cap fund have cash. I think I said them all. Yeah. You want to add to Carnival? You don't like the airlines? So Carnival and the airlines obviously have big discounts here, and I've been getting the question a lot, like, all right, do we add to this or not? I think you have to, right? Like Carnival's got a lot of debt now, so it's not going to be this miraculous rally that takes you out of nowhere. You're going to own it for a while. They have a lot of debt, and they're not really scared to add more debt if they need to. They've actually said that in their conference calls, but I don't have a problem with it. No. Yep. He's a Tesla fan there. You a 3-bucket strategy guy for retirement? I don't like to bucketize specifically like that. I do in my head. The trouble is this bucket may be comprised of pulling money out of this account and this account, right? So I don't want to say bucket number 1 has the traditional IRA, bucket number 2 has the taxable account, bucket number 3 has some taxable and Roth. It's because what if I can show you that if you have some money coming from an IRA in 1 year and maybe a third of it from the Roth, that bucket should change only in that year. So I like to drill down a little bit more, to be honest. Yeah. You guys at Jazz still hitting? Work hard. I'm thinking about adding another 100 shares. Can you? I'm thinking WBK. I'm sorry. I was thinking WBK because they're done. They are officially done. Yeah. Different ticker symbol. Yeah, absolutely. Yeah, you could use this to me. You could use this dip to be buying that as well. Yep. No. You want as a good wait for Nike, a rebound before you keep adding? Well, no, I wouldn't add just today, right? Yeah, first day of a large move there. So a general rule, first day of a large move to the downside, I don't have any particular rule that says, and oh, by the way, if it hits a new low, but the first big move there, don't chase that. Look at the volume in the background. Can you see it? Is that above average volume or not? I mean, that is the highest volume we've seen in over a year, and I know that because my chart's set to a year. So do I want to get in the way of that much selling? Not to mention the fact that it was higher at one point, and it erased all of that and then went negative. I just feel like it's kind of let the dust settle a little bit. You know what I mean? Let the dust settle. That's right. I appreciate the compliments there. Yeah. AMD thoughts, need more than that, man. Help me out. What do we got? It's the same thing. It's a slightly bigger move that's on its way to new lows there. If the broad market's getting weaker anyways, even in the short term, that's going to be enough to make new lows in AMD. What do you look for a good valuation in insurance stocks? You talking like, are you going to categorize them? Or are you just saying broadly, health insurance counts, auto insurance counts, every type of insurance I'll put in the same bucket there? You're going to have to probably segregate it a little bit to look through. And to be honest, you're going to look through their transcripts. If you're really interested in it, you're going to look through their transcripts as well because they're on their own universe as far as their risk metrics go. Yeah. All right. Got some love for Alibaba and Meta. I still keep calling it Facebook, man. All right. Well, we have a meeting tonight at the Tampa office, so I've got to get going here. Appreciate you guys hanging out with us. And we'll be back tomorrow, of course. We'll do this all over again, see what the markets have in store. More weakness, more strength. We will see. You guys enjoy, and thanks for hanging out with us. We'll see you then.